Now, ladies and gentlemen, please listen and listen to me very well. Whenever we talk about group, which standards are governing us? So group, we have what we call IFRS 3, business combinations. Business combinations. Then we have, in this case here, IFRS 10, right? In this case here, what we call the group consolidations. Group consolidations, right? Then we have, in this case here, IAS 28. IAS 28, we have IAS 28 talks about investment team, associates, and the joint what here? Joint ventures. We also have others like IFRS 11, IFRS 11, talking about what here? Joint arrangements. But these three are the most important for your exams. For your exams. Very, very important. So when we talk about business combination, we are looking at the coming together of what here? Entities. Like what we call mergers, what we call acquisitions. But remember, according to IFRS 3, you can only combine businesses and do what we call group consolidations if, ladies and gentlemen, the companies coming together are in business. So assuming, for example, RCM was to acquire, which college now? Was to acquire, talk of XYZ College, which in this case here ceased operations 2 years ago. So meaning that XYZ is not doing any business. It's not doing any business. So then you can't give us a consolidated statements of RCM group. Because what we have acquired, for example, if XYZ has got land, property, what we have acquired are properties of that particular business. A business should be a going concern. We should be seeing sales activities. We should be seeing operations. All right? Operations. So basically, we are looking at combinations of what your business, business means what you must be busy. You must be busy. Ladies and gentlemen, there are businesses outside there which don't do anything much, right? So you've been having a business A and B. So B has been in business, and then automatically, in this case, it becomes a discontinued operation. Yeah. So if it's a discontinued operation, IFRS 5, do we continue in this case here consolidating? Right? Or should we cease consolidating straight away and prepare what we call, if it's a financial statements, whatever, for a discontinued operation? So we'll be able to look at that. But for now, we can only talk of business combinations, business which combine, can only do group consolidations if both of them are in business. They have sales activities, etc. Then we come to these group consolidations. So when we talk of group consolidations, IFRS 10 is going to give us the general overview, the general steps that you have to follow for you to be able to come up with what we call a consolidated statement of financial position, a consolidated income statement, etc. Now, please listen and listen to me very well. Listen and listen to me very well. So whenever we talk about, for example, this concept of consolidation, what is to consolidate? To consolidate is to add, is to put together, And this is what is going to happen, ladies and gentlemen. You'll be given here X, company Y. So they're going to give you sales. So this is, for example, 10. This is, for example, 5. They're going to give you cost of sales. So cost of sales, for example, they'll give you 3 here. They'll give you 1.5 there. All right. So we have what we call gross profit. So gross profit here will be 7, and this will be 3.5 like that. Yeah, 7 and 3.5 like that. And then, of course, we have expenses. This could be like, say, 4. This could be like, for example, 1.5 like that. So when you subtract, this is 3 and this is 2 like that. So basically, we have net profits here. We have net profits there. 3 and 2. All right. We shall overcome. Yes, Monica. That is how it is supposed to be. We shall overcome. So then you are told here that X has acquired 80% of Y. X has acquired 80% of Y. That is number one, 80% of Y. And then in the year, X sold goods, X sold goods, X sold goods, worth Kenya shillings at 2 million to Y. 50% of these goods were unsold by end of the year. By end of the year, the company's markup is 25%. The company's markup is 25%. So now you have to write this question. Then you are required here to come up with consolidated income statement. So required, consolidated, consolidated income statement. Consolidated IS, consolidated income statement. 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 So I just want to do something very simple. This X acquired 80% of Y at the beginning of the year. We're not doing a middle year acquisition. So we stayed with Y for a whole year. 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 Once you guys finish writing this short illustration, could you kindly put your thumbs up like this, and then I tell you something very nice here. Consolidate is to come together. Is to come together. It is what we call the group. Because when two companies here, we have a parent and then we have a subsidiary, when they come together, they form a group. They form a group. They form a group. They form a group. All right. Thank you so much. So when you tell me to consolidate, I have to remember from IFRS 10, when you talk of a group equals parent company plus what we call subsidiaries. Please write like that. Parent company plus subsidiaries. So whenever we talk of a group, nobody should ever confuse you. A group equals parent company plus who? Plus subsidiaries. Parent company plus subsidiaries. Parent company plus subsidiaries. Parent company plus subsidiaries. And what is a subsidiary? A subsidiary is any company that is being controlled by a parent company. A subsidiary is a company being controlled by another company, being controlled by a parent company, by a parent company. All right. Ladies and gentlemen, when we talk of control, remember, it's very, very possible for a kid to be your kid, but of course, in this case here, you are not able to control them. Kids are always very nice before they hit teenage life. Very nice. When they're in primary school. When they're primary school here, you send them, they run very fast, they bring. But these ninjas, they will reach a level where they are not, or rather they are yours, but you can't control them. You can't control them. All right. Where are you driving, Mwalimu, to with that illustration? Please listen. Whenever it comes to this control, there are things you're supposed to know. We can have a control using numbers. Using numbers. So we have control using numbers. Control using shareholding. Using shareholding. Using shareholding. That's number one. So control using shareholding. And if shareholding is more than 50%, if shareholding is more than 50%, then automatically the investment will be known as a subsidiary. The investment will be known as a subsidiary. So whenever shareholding is more than 50%, like this company, we have bought 80% of it. When we buy 80% of it, 80% is more than 50%. So in this case here, Y becomes our subsidiary. And then when we have this shareholding being exactly equal to 50%, then this becomes a JV. This becomes a joint venture. This becomes a joint venture. A joint venture. A joint venture. Mr. 50%. Mr. 50% joint venture. You're jointly controlling that venture. It's a joint venture. It's a joint venture. All right. All right. And then, ladies and gentlemen, whenever you have a shareholding, whenever you have shareholding here, whenever you have shareholding, so whenever you have this shareholding being in between, so whenever you have this shareholding being in between 20% all the way to 49.99%, this one we shall be calling it an associate. This one we shall be calling it an associate. Whenever the shareholding falls here, 20% all the way to slightly below 50%, that will be an associate. Then lastly, when this shareholding is less than 20%, when this shareholding is less than 20%, we shall be talking of a financial instrument. A financial instrument. A financial instrument. Or a simple investment. Or a simple investment. So basically, the companies that will be able to fully control are those companies whose shareholding you happen to be having a shareholding of more than 50%. Of more than 50%. Of more than 50%. Otherwise, if the shareholding is not more than 50%, then the other category, we should be talking of significant influence, etc., etc., etc. But this is very, very important. But as we're going to see later on, when we talk of control, control really is more than numbers. We have the qualitative aspect. We have the qualitative aspect. You could be having 10%, but you have in this case here the biggest say in the house. And I normally give this example. If you listen to my video, you must have heard about it. If, for example, we were to come like now here, we are 48 billionaires. So we contribute each one of us 2 billion. And then, of course, we raise like 100 billion. This 100 billion, although not enough, we go to Nairobi Hospital, and then, of course, we get to buy like 80% of Nairobi Hospital. We are not doctors. But now we have, in this case here, bigger control. We have a bigger percentage, 80%. The other 20% is bought by a team of doctors. It's bought by a team of doctors. So we sit down and say, ladies and gentlemen, even if we have 80%, the other guys who are 20%, they will be able to have an upper hand whenever it comes to running of this hospital. Let's cede our control. Let's, through writing, through some memorandum of understanding, let's, in this case here, give them the right to manage the hospital. So even if we are the real owners with a bigger percentage, a controlling stake, now we have ceded our right to run the business. So it means that we can't consolidate. We will not be the parent of that hospital. Because really, parenthood is all about what? Yeah, control. The one who has control, in this case, is the one who is able to do what? Yeah, to consolidate. Is the one who is able to consolidate. You know, control is about telling this company, march left, it marches left. So the 20% guys, the ones who have been able to assign the responsibility to run the company, they're the ones who are going to join the board of directors. They're the ones who will be telling these other people here, we want treatments to be done like this. If it's cleanless, this is a company we're going to hire. So you see, they're the ones who are making, major decisions. The same example that I gave you, that your own kid, for the people who have got big kids here, you'll be able to understand. Kwamba mtoto ni wako tu unaweza mcontrol up to some age. Akimaliza form 4 kwanza mwaka ya kwanza, unafaa kuomba Mungu sana. Mungu akusikize. Because some of them in this case here get to go wild. All right? Anaweza ingia bedroom hata amue kulala siku mbili na akuongeleshe. So in that case, then even if this kid is yours, then you are not in control. And if you're not in control, then you shall not consolidate. I'm just using that, assuming the parent and the kid are different companies, but of course related. Right? These are real parent, you're related. But because you have lost control, then you shall not be consolidating. You shall not be consolidating. You shall not be consolidating. Up to there, ladies and gentlemen, somehow are we communicating really? There is something, because if you look at your past papers, I really sympathize with some student. This student, they finished their exams. And then the student in this case here calls me exactly. Then he tells me, Mwalimu, I've gotten a question where they have told me that A owns 50% of B. So then I thought 50% of B, that is a joint venture. And joint ventures and associates should be accounted for under what we call IAS 28, equity accounting. So I knew that is very good. So akaniambia mwalimu music consolidate, because you see, when it's a joint venture you don't consolidate. Mwalimu music consolidate. Then when I saw that question, I counted the question saying that A owns 50% of B, but it has been given the mandate to appoint, that question that I'll be able to get it from your past paper. It has been given a mandate to appoint 60% of the directors of B. So if A has been given the mandate to appoint 60% of the directors of B, directors hao wanaenda kufanya nini kwa kampuni? Wanaenda kupika ugali. That's what you're seeing in this case, like our president and the other guy, everybody wants to have a controlling interest in IEBC. Because the one who has a controlling interest, ladies and gentlemen, will be able to make major decisions, including announcement of the winner, even if the winner has not taken it. So those directors are going to kupika ugali pale, want to make major decisions. So even if you're told that company A has 20% in B, but A has been given by the other shareholders the right to make management decisions, then you know that is a power being given to them. They are powerful. So even if we have 20%, it is substance over form. So in that case here, we have to do what here? We have to consolidate 20%, less than 50% shares, notwithstanding. We must consolidate. We must consolidate. Now, ladies and gentlemen, remember, as I try now to solve this, we must remember something very, very important. We must remember something very, very important here. The one who has control, is the one who will be called the holding company, and is the one who is going to consolidate. The one who has control is the one who will be called the holding company and is the one who has to consolidate. Allow me to use funny examples. I like using funny examples, and they really help my students here. So here you are, a young man, you've married this great, beautiful woman. Very great. Alafu sasa nasikia kuna kukaliwa, mi nasikia kwa mbali. Sasa ukikaliwa kidogo kwa nyumba, meaning that you're being controlled. So if you're being controlled, then it can't be you consolidating. The one who is controlling is the parent. So it should be your wife consolidating your operations to hers. So the one, ladies and gentlemen, who is in control, the one who is able to say, do like this, you're a puppet. You move. You move. That will be the parent. That will be the parent. We've gotten many situations where students are not able to pick the parent, which becomes, in this case, a disastrous, which becomes disastrous. We must know how to pick the parent, and the question will always be very, very direct. It will tell you exactly like here, we have two farms, A, B. B is able to do this and this and this and this on A. So you're able to know B, in this case here, international disaster years. So B, you're able to know straight away that B is the controller. B is the controller. Now, ladies and gentlemen, please listen. We don't use markup. In most cases, in group consolidation, we shall use margin. So if you're given markup is A over B, to get margin, unafaa kujua kwamba margin iko na makalio makubwa. Margin iko na makalio makubwa. Profit margin, una add ile A chini pale. Base ya margin lazima ikuwe kubwa. Base ya margin lazima ikuwe kubwa. Yani, if for example they tell you margin is 25 over 100, can somebody in this case here give me markup? So markup will be equal to what? If they tell you margin is 25 over 100, markup will be equal to what? Uongo, nilijua hii. So nimesema tu saizi kwamba margin inakuwa na makalio makubwa. Base yake ni kubwa. So ukienda kwa markup, una subtract. Nilijua ndawashika hapo. Angela ameona, ukienda kwa markup, una subtract. Lakini ukienda kwa margin, una add. That one mwalimu I'll never forget in my lifetime. So nikienda kwa markup, itakuwa 25 over 100. So kwa markup, you subtract. Which will be 25 over what year? 25 over 75. Is that okay? Yeah, I can see you guys really got this right. Yeah, great. Yeah, 25 over 75 like that. So like now this one, they have given us markup, and yet we need margin. In most cases, ourselves here, we shall be needing the margin. In our case, we shall be needing the margin. In our case, we shall be needing the margin here. The margin. So anytime they want us to give them the margin, like now here they have told us markup. They have told us markup. They have told us markup. They have told us markup is 25 over 100. So then margin has a bigger denominator. So margin, I will come and add the profit there, which will be 25 over 125. That's how they got that, a fifth, I think. A fifth, yes. A fifth. So then what do we normally use this profit margin for? Ladies and gentlemen, remember, again, allow me to use some bad examples. Those bad examples, like Emilio Odhiambo told us, the concept of the bad girl. I don't subscribe to that kind of school of thought, but I mean, some of these examples here make sense. Now, assuming, ladies and gentlemen, you're a great husband, yeah, and you happen to be having that kind of great boutique kind of a shop at the city center. Your wife, is it this kind of a woman, great woman, who loves fancy things? Because great women love great things. So every day when she passes by, she would want to pick something. So she goes home with this dress next time again. So will you be charging this lady for the dresses she picks? If you do that, then as a husband, you'll be just but another one. Then you have a problem. In group consolidations, sales within the group will always be fake sale. Sale within the group will always be known as internal. Internal sales must always be eliminated. Internal sales must always be done what here? Anything that is internal. My wife wakes up this morning, tells me, Mwalimu, she normally calls me Mwalimu. Mwalimu, give me 100,000, for sure I will refund. So assuming I have the money, I give this 100,000 to this great lady. Take it. Do you think, in all honesty, I will ever get that money back? Even though she said that I'll give you this money, for example, tomorrow evening. Do you think I will ever, be very honest here? No way, isn't it? No way. You can never get it. That money will never come back. Will never come back. It's internal. But again, as you know, as the world is, the boy child is always very, very disadvantaged. What if it were me asking for that 100,000 from my wife? And I tell her this money will be back on Friday. Do you think when that Friday comes and I don't have that money, do you think I'll sleep comfortably in that house? Because all manner of excuses will come that this money belongs to a chairman, it has got even interest, etc. All right. You even pay with what here? You even pay with interest. But for us, anytime you see a question has got anything internal, we shall always be subtracting according to the dictates of IFRS 10, rules of elimination. We shall always eliminate anything internal. Anything internal must be eliminated, Just as simply, if you're here and you're married, you're a lady who is married, in this case here, ensure that if your husband has some money, please, for the sake of the teacher here, enda mwambie mwalimu amesema nikuachie. Hivyo tu, mwalimu amesema hiyo pesa nikuachie. At least tukuwe na equal playground. Hata ushakula yake siku ingine ukishia. Ila tu mwambie hii kusema ukweli roho safi, hiyo pesa hata atashangaa sana. Hiyo pesa nimekuachia, hata haiko ya chama. Hiyo pesa nimekuachia. But in terms of group consolidations, anything that is internal, we shall always be doing what here? Deducting. Because it is what here? It is fake. Because it is fake. It is fake. We shall always be deducting. Now, ladies and gentlemen, please listen. You'll be told here that company A has given company B, a subsidiary, a loan of $1 million. The rate of interest is 10%, meaning that the end of the year interest, finance cost, is overstated because these guys will charge 10% interest. That's 100,000. When it's individual, it will book that as an expense, as a finance cost. So then I have to go to my group finance cost, take the interest given for the two companies, maybe 200,000 company A, 300,000 company B. I add the two, but I will always remember to eliminate that 100,000. And then when I look at my loan balances, I also have to go there and subtract what here? Subtract $1 million. Subtract $1 million. So those adjustments are very, very key. And I would want to call upon you guys. Please ensure that today, if possible, I know you are busy. I know you are busy. That one, of course, that's why I'll never fight with any CPA student. You'll never get me in the Kasrika. Mine is to just motivate you, all right? To watch all of us the first video on group consolidation. The first video on group consolidation, we are going to watch it. If possible, when? If possible, today. If possible, today. Is it possible for us to do that, ladies and gentlemen? Is it possible for us to do that? Let's say that she will never forget, okay? Yeah, so that will be very, very good. And then I don't want our discussions here to, for example, happen like now next Monday. No. I would want our discussions, like for example, those of you will be able to watch this over lunch hour. Then we should be able to start discussing immediately. Mwalimu, I never saw how that goodwill was arrived at. All right? I never saw this and this and this. We should start discussions immediately. Because the moment there is a group consolidation, a group cash flow, mshapita hii exam. That one I can assure you. Otherwise, thank you very much. Have a lovely day. See you tomorrow. And always keep on saying hi to your family members. There are times I normally go to supermarket, napata mwanafunzi anaambia, mami, mwalimu wako, mami ndio ule, mwalimu wako. It becomes very good. Good day. Bye-bye. Kesho morning, it's the advanced financial management. Kesho morning here for advanced financial management. Thank you. Angela, sisi hatuna class ingine tena ya Sunday. Niweza kung'ang'ana na LMS because of that. You know, when you are working with LMS, you move faster. You can put that speed of 1.5. So no jikaze. Maybe when you mwalimu for Sunday, maybe 2 p.m., come we watch these videos together. Then we do discussions like that. Otherwise, I would want my students to rely on the LMS because we want 100% pass. Thank you. Be answering the WhatsApp questions. Notes, Viscamp, soma kwa hiyo LMS, utapata kwa hiyo kitabu tu. Utapata kwa hiyo kitabu. Yeah, I'll be keen on the